Today's episode is brought to you by Nexo, BitCasino, and Cosmos. You'll hear more about them later in the show. What is up, everybody? I'm Scott Melker, and this is the Wolf of Wall Street's podcast. Almost 10 years ago, a subreddit formed around a shared interest in volatile stocks and high-risk strategies. Over time, the group quickly grew, eventually culminating in the GameStop saga that unfolded at the beginning of this year. This epic short or gamma squeeze rattled the entire stock market, forcing everyone that thought they understood financial markets to reconsider what they'd come to know. Today's guest is the founder of the WallStreetBets subreddit, and I plan to discuss the legacy of this saga, how they managed to move the market, what the 10 million member group is doing today, and what Jaime has his eyes on for the future. Jaime Rogozinski, it's a pleasure to have you on the show, man.
Hi, thanks a lot for having me, Scott. It's a pleasure.
Yeah, absolutely my pleasure. And once again, before we get into it, you are listening to the Wolf of Wall Street's podcast, where twice a week I talk to your favorite personalities from the worlds of Bitcoin, finance, trading, art, music, sports, and even politics. This podcast is powered by Blockworks Group. You can check out everything they have going on at blockworks.co, and you can check out everything I have going on at thewolfofwallstreets.io. So Jaime, man, I think at this point there are nomadic tribes in the farthest reaches of the planet that are familiar with WallStreetBets. Did you ever imagine that it would become a household name?
No, I did it. I watch it grow organically over the years, right? For the past 10 years, it's been, growing very healthy, like doubling every year in size. And I think that prior to the GameStop saga, a lot of people in the world of finance knew about WallStreetBets. It had already been on the news, like the financial news, like CNBC and Bloomberg and things of that nature. But this GameStop saga absolutely exploded it and did turn it into a household name.
Yeah, so I want to talk, might as well dive into it, right? Let's talk about GameStop. Obviously, WallStreetBets built, you guys used your collective power to short squeeze Wall Street, or at least that's the narrative. How did that come together? What made you identify GameStop as a great target for that move? And then what happened?
Well, first off, I didn't identify GameStop. Pretty much anything that has ever happened on a high profile basis, or sometimes not even high profile, but interesting, has been because of the people, right? That's kind of the power of social media, the power of community, is that you collect the greatest minds, and you salt in a little bit of luck and a lot of fun, and that's how you end up with what we have. But GameStop, it was selected by a now famous Keith Gill, right? Goes also by Roaring Kitty. And then I don't know if you're allowed to curse or not on your podcast.
Yes,
but he's,
have at it.
So Deep Fucking Value is his name on Reddit. And the guy's just a hardcore fanatic of GameStop. He'd put in a bullish bet in 2019, or he'd been long about it for over a year, or maybe it was 2020. I don't know. And he threw 50 grand in there, and slowly GameStop started growing. And sure enough, it just caught fire and exploded the way it did. It turned it into like $50 million or something like that. But GameStop specifically, a lot of people say, well, why don't you do it with this stock or that stock? GameStop had like kind of the perfect storm in order to pull that off. You need to have definitely an element of luck, definitely an element of visibility. But in this particular case, it was also extremely shorted, right? And this was what was reported in the news. There was large hedge funds that were taking a short position, meaning they're hoping that the price goes down. And so that's one of the elements. The other elements, a little more technical, but still pretty fascinating when you dig into it. It deals with how the stock option profile was with the company, as well as the volume and things like that. But once it starts going up, basically it forces all participants in the market, all of them, to start buying the stocks, whether they're short or long, or selling these calls or selling these puts, or members of WallStreetBets. And so, and then the media has decided to pour a little gas on that fire and pretty much exploded. So it's a lot of fun.
Yeah. Everybody I think knows the story, and it's incredible. And I think it speaks to a larger concept, which I'm curious your thoughts on, obviously, is that with quantitative easing and money pouring into the market and stocks only go up and all of the memes that we've obviously seen, and then you have a stock like GameStop that was probably being shorted for a reason, right? It's a brick and mortar business selling video games. It's Blockbuster, right? GameStop would have otherwise probably been going out of business. So I guess, what is the fundamental value of a stock at this point if it can be so easily moved based on market conditions and actually the trading and those underlying factors rather than the actual fundamentals of the business?
Well, I struggle to agree that it's easy to move the stock, right? But I would definitely agree with the fact that those fundamentals are not always in sync, and we've seen that for quite some time. They're not as out of sync as people like to assume. They'll look at some of these metrics of the economy and things of that nature, and just jump to conclusions that they're completely disconnected. But they're not quite, because when people say the stocks go up, they tend to look at the indices like the S&P 500, the Dow Jones, Nasdaq. And the way those indices are, and that's just a number, it computes a number and it gives it to you. And if that number goes up, they're like, cool, the stocks are up, right? And the way that that number is computed, it takes a bunch of stocks and it weighs them differently. And it just turns out that the fundamentals of the stocks that most heavily affect that final number are actually doing pretty well, right? There's a lot of tech stocks that benefited from the pandemic and stuff. But look, but on the other hand, you have had a huge slow divergence from not necessarily the reflection of the fundamentals, but the purpose of the stock market. You've had, the stock started because if you're a business and you want to raise capital, you go public and you raise capital, you reinvest it, R&D, whatever, and you grow it, right? And it helps with the economy and you get more jobs, stuff. As years have gone by, you have businesses that raise their money before going to the stock market through private equity or venture capital or whatnot, and series A, B, C, D, et cetera. And then they'll go public, not to raise more money, but to pay back the investors, right? So just that fundamental action started to disconnect. And then you start having all sorts of synthetic tools like derivatives, the ETFs, and things that just become very abstract and real separated from this whole let me raise money for R&D purposes. Then let's go ahead and throw some money from the Fed that's printing. Absolutely. That's definitely going to have an effect on things. This last year, we had an explosion of these SPACs, right? These are special purpose acquisition companies, if I'm not mistaken. Mm-hmm. They're basically just shell companies with the intention of someday doing something, right? But they don't have anything. They don't have oftentimes offices or employees. They just have kind of an idea and a good marketing team. So you start seeing all these things and like, all right, cool. So what's the purpose of the stock again? Let's reevaluate. And it's not necessarily a bad thing, right? It's just changing its original purpose. And we see a lot of that, and we see a lot of crazy fluctuations, and we see a lot of unintended consequences. We see events like, I don't know if you guys are familiar with what happened with Archegos Capital, but it's just this hedge fund so that's a yes.
Yes, we've talked about it at length, but yeah, certainly go ahead.
Yeah, it causes all sorts of problems in the stock market, right? Like, why should these companies that lost 50% of the value have anything to do with anything? And it's just because of all these interconnected complexities that exist.
Right. I mean, the companies that he was invested in should not have seen a 50% move because he was, borderline illegal trading activity. It really is such an amazing story, though. You're talking about a guy who basically been kicked out of the hedge fund world for 10 years, found a loophole to trade through family offices, putting his leverage on the bank's books without doing it himself. But the very fact that these things exist kind of speaks to the fact that there is this disconnection from the reality of the fundamental value of these companies and what we're seeing in the market.
Well, what's cool about that story is, this guy found a cheat code, right? Yeah. He found a loophole, a cheat code he found. Yeah. And that's something that's always been around. That's what the markets are about, try to find like an edge and try to find an inefficiency or a weakness. That's kind of how it works. And the cool thing about what the community of WallStreetBets and in general, the retail trading community, which has grown so much this year, is they do the same thing. And now they can do the same thing, right? They'll find their cheat codes too, and they can effectively muscle their way in. So that's what's really neat.
Yeah, but so why is everybody so mad when retail finally uses the same cheat code that hedge funds have been using the entire time?
Exactly. Yeah.
But why do you think that's so appalling to everybody? Is it because Wall Street, feels people are infringing on their territory, or all of a sudden they lose the control when they realize there's somebody else who can do it? I mean, what's behind that?
I'm not convinced that everybody's appalled. I'm convinced that the people that lost money are appalled. Right? But I think the reason why I got a lot of attention is because a lot of people were not appalled. A lot of people were applauding, right? But
not Wall Street themselves.
Not Wall Street. No, right. It's finally like, the little guy, the 99% finally can have a voice. They don't have to pitch tents. They can actually cost money to the big guys that have been there forever, and they can make money themselves. They can be empowered. They can share things, and they can do it, in a democratic fashion, which is in the spirit of what we do here. So I think more on average, I think more people celebrate what happened with GameStop than
When I meant appalled, I was specifically speaking of Wall Street. I think your average person absolutely loved it
yeah,
across the
yeah.
board.
Well,
Yeah.
there you go. So Wall Street's appalled because this has been kind of like an invite only club, right?
Yeah.
It's been just a handful of people's. It's hard to get in the culture of it. Even if you're, I'm talking about Wall Street as these firms, right? These aren't individuals. But even if you want to work at one of these hedge funds, you still have to go through. It's still hard to even be an employee at one of these firms because of the competitive nature and whatever. And it's been exclusive. It's like, no, this is for us. You're not allowed here. Thank you very much. Much like this other guy that from Archegos got kicked out. It's like, all right, well, I'll just do this on my own. And they don't like the fact that there's a new player at the table. If you can imagine playing poker, and if you've ever played poker with a guy that either is reckless or has no idea what he's doing, it screws up the game, right? It screws up all your odds because you have to assume that all the players use the same logic as you. And if they don't, that's going to cost you money, and that's uncomfortable for them.
Yeah, I agree. It's interesting. A lot of my friends are hedge fund guys. I went to University of Pennsylvania in the late 90s. So that was sort of like the path that most people took. And you guys did exactly that to every single one of them that I've spoken to. And I'm not talking about like your hedge fund in general or Wall Street as this amorphous beast or whatever. I'm talking about people who are fundamental analysts and make their money analyzing stocks can no longer do their job as a result of what you guys did. And they told me this. They said, listen, like now I just need to go on WallStreetBets and figure out what they might squeeze next because the earnings call with the CEO is useless. Means nothing.
That's really funny. Yeah. I mean, yes and no, right? Like it definitely makes their job more difficult. They have to have a new skill set, such as going on WallStreetBets. I still believe that these guys can coexist. If you zoom out a little bit on the chart, you have Warren Buffett's going to be fine, things, regardless of WallStreetBets, right? So there is and that's what's cool about it, right? There's enough room for everyone. You can have the traditional or fundamental investors. You can have the quants that do high frequency. You can have the technical traders that use their stock pattern, chart patterns or whatever. And now you can have these meme stock traders that just go wee to the moon and they have so much fun and they actually do make money. And they need to be aware of the other participants. So they need to consider the new risks associated with the new participants. But I think once the dust settles, everyone's going to be fine.
Yeah. So what's the risk to the retail guy who goes, woo, and says, hey, I've got diamond hands and I'm never going to sell this. And then eventually the stock that's being shorted for a reason does make its way down to the floor.
The risk is that you lose all your money. But here's what's kind of interesting. Like whenever I have a discussion about risk, the grand majority of people that I speak to have this traditional mindset, this boomer mentality where losing all your money is the worst thing that could happen, right? And these meme stock traders, they go into this assuming that one of the scenarios that is possible is that they lose 100% of their money. I'm not talking about 5% or 10%. I'm talking about you lost your entire money, and they'll say, I will hold this to the grave and I'm willing to lose it all just for my principles. And that's kind of a new way of thinking. Obviously, what they're doing in order to pull that off is oftentimes using leverage. So losing 100% of your money can be $100 or $500 or $5,000, right? And if they lose that, it really blows. But then they wait a couple of weeks, get more money from their paycheck, and they try again. Because if they hit one of those things, they can make a ton of money. And so this mentality of risk has been kind of shifted so that it fits this particular demographic. And they're so open about saying, so what if I lose all my money? I'll reload and try again.
Right. So listen, I mean, people are responsible for their own financial decisions. And if they actually approach it that way, then good for them. Right. But in markets in general, and I'm not saying specific to your situation, but we see a lot of people who don't understand the risk and sort of, FOMO in just because they heard about the trend or just because they heard about Doge going to the moon or whatever it is. And they don't understand that it could actually go to zero, right? So the people are responsible for their own financial decisions, as I said, but there is a lack of education, I think, around financial markets where 99% of the people do not have that inherent passion, or they're not doing it to stick it to the man. As you said, they're buying it because they think it's going to go up and don't realize it can also go down.
Absolutely. And I oftentimes I get the question if I feel bad about that situation, and obviously I do. But what I feel even worse about, like, if you have somebody that takes some massive loss, lost millions of dollars, then I feel bad for that individual. But collectively, I don't feel as bad if this individual had made a ton of money. And it's because of what you just said. If one guy goes out there and makes, hits the lottery, the jackpot, and makes so much money, and it happens more frequently than you think, where you take $1,000, turn it into 100,000, then these people that don't fully understand it just say, look, I don't feel like learning about it, I'm just going to copy this guy, or I'm just going to try and replicate this, hoping that they're going to be able to retire next year, or next week, or whatever. And then that causes a lot more people to have this costly learning experience, because there is winning and losing, and it is a zero-sum game. When somebody loses money on a public way, then it's a good reminder to people, especially if they're just coming in. It's like, wow, okay, this guy just lost a ton of money. Perhaps I'll just play with the money that I'm willing to lose.
So basically the argument is that we finally made those aggressive losses and risks so visible that maybe it actually helps future market participants, because they've seen how many people got rinsed in this situation.
Absolutely. Look, everybody loses money in the stocks, or just in equity. It's investing in general. It's just part of the game. And obviously, the worst thing that could happen for someone is to have beginner's luck, because then it gets to their head that they're talented or whatever.
All the time. God tier trader.
It's awful. It's happened to me. It's happened to a ton of people. But it's part of the tuition, the learning curve, and you get over that, and then you either decide it's not for you, or you kind of get into a little bit more, you get a deeper understanding of it, and then you move forward with it. But having a community which is so transparent and visible and open and unapologetic about how and why and what they're doing, that it does speed up that learning process, even vicariously, just by watching experiences, because it's entertaining. It's a lot more entertaining than reading a Wikipedia article.
I never thought of it that way. And it's absolutely true, because you're exposing the risk and exposing the losses, which I think is great. I always used to joke that, like, there's the statement, you can't trust a skinny chef, right? The chef should be fat. It's like, you can't trust a trader or a poker player who hasn't gone bust at least 2 or 3 times before.
Yep. It's part of it's part of the learning curve, and it's a rite of passage, I guess.
Yeah, I love what you said about the worst thing that can happen being people win immediately. I talk about it all the time. It's random reinforcement. The market always reinforces your bad behavior, right? So it makes you think you're a god tier trader. You start leveraging up. You do all these things. Eventually, you get punished. And my audience is largely crypto and Bitcoin based, and so many of them experienced that in 2017, right? So all the things we're seeing in the stock market now is old news to us.
Well, it's the same stuff, right? Like crypto, I mean, we're talking about numbers that fluctuate on a screen, and you're just trying to figure out whether it's going to go up or down. There's mechanical differences, and it's not 100% the same thing, but at the end of the day, the people are going into it because they want to make money, and those fluctuating numbers go up and down, and sometimes it's because of what you predicted, and sometimes it's because of luck, and sometimes it's because of just completely random sequence of events. So it's universal.
Yeah, it is. Humans are pretty predictable in that manner, I think. I want to talk about your perspective on Robinhood's role in the entire thing. I think that there's been a lot of cross messaging as to what happened after GameStop. Obviously, I think it was pretty alarming for the first time in history to see the buy button turned off and the sell button left on. I thought that was really interesting, but I'm curious from your perspective, being in the trenches while this was happening to some degree, what happened with Robinhood?
I mean, talking about trenches, I was in the middle of doing a live nationwide interview in the U.S. I forget which media. It might have been CNN primetime, and the anchor said, "Hold on, we're just getting breaking news. Robinhood has stopped allowing people to buy GameStop. Why is that?" And I'm like, "You just told me what's happening. I have no idea." So I speculated at that point that I kind of guessed it, right? I'm like, it can't be their decision, their conscious decision, and it's not going to be some crazy conspiracy. It is a nuanced topic. It's a lot more. On the outside, it's like, all right, well, the way that it's been described a lot, it's you have Robinhood, the broker that allows people to do these trades, and the biggest broker that the majority of people are using to make these trades, is facilitating this GameStop going up. And on the other hand, and then these retail traders, these meme traders, are making tons of money. On the other side, you have large Wall Street institutions that are losing money because they have that short position. And then magically, Robinhood appears to align themselves with these bad guys, and they facilitate, they cost a lot of money to the retail traders. They stop putting into this madness, and therefore they're bad. There's no, beating them in. But the reality is that it wasn't Robinhood that stopped. It was all, or virtually all, brokers. Robinhood got the bad rap for it because they happened to be the biggest one involved with this. But every major broker you can think of had that same problem. And it wasn't a conscious decision of saying, I no longer feel like allowing this madness. It was a consequence of just the mechanics behind how stocks actually get traded. You have to go from the broker to in some cases, payment for order flow, and then to these exchanges, and then to these clearinghouses, and then you have to wait settlement times, and you have margin required. And this is archaic system. It's like, when I go deposit a check in the bank, I got to wait several days for that to happen. And you can pretty much chalk it up to that same technology. The same thing that made me wait 3 days for my check to clear is the reason why Robinhood had to stop, because Robinhood had to put up billions of dollars, and so did the other funds, in order to continue allow trading. And I don't know if you've ever tried raising billions of dollars overnight, but it's tricky. And they did, though, right? So
they actually did it.
They did it. And so, they did their best. And so I feel bad that that whole situation was misunderstood. But I also see that as a great opportunity, because guess what? Like with this event, as well as previous events, these systemic problems are being exposed and fixed. Hopefully, there was, as a consequence, congressional hearings, and then we saw that circus takes place. But hopefully, we'll have some regulatory changes that will not fix it, but make improvements. Maybe they'll make the settlement time shorter,
less than 48 hours, right?
Yeah, whatever it could be. And that's great, because now, guess what? Thanks to these retail traders, they broke the system, and now it's going to get stronger.
Right. But don't you have a fear that regulation will be dumb regulation? It'll be heavy handed, and it will inevitably hurt retail and help the institutions?
I don't have, will the regulation be bureaucratic potentially? Absolutely, because it's government. And so it's not necessarily going to be the greatest solution. But that's just the nature of the beast. And there's some virtues to that process, the slow and steady and whatever. But I don't feel that's going to do it, because, for one, I don't think they would do it on purpose, where they say, okay, now that we're fixing up the settlement time period, let's go ahead and stop WallStreetBets from manipulating the stocks again in the future. I don't think they have the motivation to do that, because they'd be interfering with the free market process, and they're pretty big advocates of that. So they'd have to go ahead and I don't know, they'd have to put an end to free trading. They'd have to start deciding what the prices are on their own, and that's not what they're there for. Number two, if they said, okay, let's go ahead and try and stabilize it, because the volatility was so crazy that's not healthy for the market, and I agree. And they make something too aggressive, the financial system is so complex and so interconnected, there can be unintended consequences, and they can roll up innocent actors or traditional investors that had nothing to do with it, and now all of a sudden they're being impacted in a negative way. There's no way to just carve out regulation for WallStreetBets, and so I'm not concerned that's going to be a problem. And as much as the SEC and FINRA, they get a lot of flack, I truly believe that what they're trying to do in their actions, whenever they take them, is to protect the consumers. And I agree with that.
Yeah, I think we agree on that. But so I'm curious, though, going back to Robinhood, it was all very spur of the moment decisions regardless. Obviously, everybody knows now that there was no way they could keep the buy button, but we've seen breakers in the market before, and it seems like maybe they could have also removed the sell button until they figured out what was going to happen. But I guess that could be a conversation.
Yeah. I mean, it's an impossible situation. I don't even like to imagine what it would be like to be in that room.
But speaking of Robinhood, so it also, I think, exposed another underlying issue, right? Which is the 1,000-page terms of service that everybody accepts and never thinks about on everything that we do in life that said, hey, you're not actually buying stock here, right? There's people who bought a share of GameStop or something on Robinhood, or 100 shares or whatever it was, thought that they owned the stock and got liquidated as if they had taken a leverage position with a margin account. That's problematic.
That is extremely problematic, and that is an issue of communication and also designing your products to make sure that you understand as a as a provider, as a broker, that you need to really know what your objectives are in this market, and you need to do a good job with communicating it, because that's not fair. And there's been mishaps with poor communication or poor displaying of information previously, right? There's this famous case where the guy was trading these spreads on Option House, and he got assigned one half of the leg or something like that. And when the computer shows you your balance, it showed negative.
The kid who killed himself,
and it ended really poorly. It ended bad, and the guy hadn't lost money. It was just it was an interface.
At that moment, that was his balance, but did not reflect his actual balance. Yeah.
It didn't reflect. Yeah, it didn't reflect his what do you call it? His the account size, right? Just the cash balance.
So that's brutal. But so, I mean, I think that just kind of speaks to the fact that, and you say it's sort of maybe accidental or they didn't communicate it well, but maybe to take the devil's advocate, that seems purposeful. And I'm not saying in the case of Robinhood necessarily, but a lot of companies, and Robinhood certainly falls under this, but they advertise the no fees. They advertise free trading. They advertise fractional stocks or whatever all these things. But the minute that something's free, as a consumer, you should be a skeptic, because obviously you're no longer the customer, you're the product.
Look, I agree 100% with you when it comes to not having the underlying asset when the interface is making you believe otherwise. And you have to assume people won't read those terms, even if they click I agree. So I don't believe that's productive. I think that's bad for a bazillion different reasons, but there's so many reasons that that'll go into a tangent. On the other hand, when it comes to this whole you're the product because the payment for order flow concept, where you're getting front run or whatnot, you're not getting the ideal prices on your trades. I used to think that was bad, right? When I started learning about trading and really into it, like I didn't like Robinhood, to be honest with you, because they don't even show bar charts, and their execution was awful. And if you're a technical trader like I am, those little pennies really matter, and they matter a lot. And so I said, no, this Robinhood is not going to work, because with my strategy, you're just going to get slammed by slippage or whatever, being front run. But then all of a sudden I realized that just like Warren Buffett doesn't need to be co-located like high frequency traders, meme stock traders don't need to be, as far as I'm concerned, getting the greatest execution for their particular strategy. Roaring Keith Gill turned 50 grand into $50 million. And I doubt he really cares if he got the best
right
sense.
Could have been 48 grand turned into $50 million instead if he had gotten a slightly better price without slippage. Right.
So as far as you're concerned, it's like, all right, cool. So thanks to this crazy, this system that they've set up, I'm able to trade for free. So I'm going to develop a whole different strategy that capitalizes on this I'm the product idea, right? I'm going to find a cheat code to the fact that I'm being the product. Maybe they don't think about all this consciously, but subconsciously, that's kind of what we're observing. People that even after people are aware about this, they continue to use Robinhood like crazy. Sure, and oftentimes people forget that Robinhood had, as far as I'm concerned, a much bigger slip up last year when
going offline during the COVID crash. I mean, that's way worse.
That was brutal, because with GameStop, it's like, all right, well, it's only allowing me to sell, right? So you can map out the different scenarios, but you knock the broker offline entirely. Now you've broken both buttons during the most volatile moments in the world, and people just got over that and moved on with their lives. And that's because they do love Robinhood. The interface, I don't know, there's something there that doesn't get discussed enough.
Yeah. Yet again, coming from the crypto community, we just call that Tuesday. Like Coinbase now will probably be one of the biggest companies in the world and still can't stay online anytime there's even like a slight spike in volatility. I don't know if you've ever, traded there, been a part of it, but it's been a joke for as long as they've existed, basically, as you can predict how big a Bitcoin move is going to be by how long they're offline. What's better than having the chance to win a Tesla? Having the chance to win 3 Teslas. Put your foot on the gas, tear up the tournament track, and race into epic rewards and a chance to win 3 Tesla 3 Model 3 performances. From April 12th to June 27th, take part in 10 terrific highest win multiplier tournaments running back-to-back for a week apiece with Bitcoin standalone prize pools per qualifier. You'll be playing live crash, packed to capacity with awesome features. A small Bitcoin minimum wager per tournament gets you in on all the action. Sign up today and stand a chance to win. Register into each of the upcoming tournaments using my personal URL, thewolfofallstreets.link/bitcasino for a special incentive. Feel the force with BitCasino and the 3 Tesla promo. Guys, it's time to wake up and go earn some money. One of the most exciting use cases of crypto is both to earn yield and take low interest credit loans, especially since your actual bank is giving you nothing in interest. Nexo is leading the charge in this arena with 360-degree crypto banking services. If you're just looking to park your crypto, do nothing, earn some interest, you can make up to 12% a year by doing nothing. If you're in the market for a loan, they have them for as little as 5.9% APR, and you don't have to sell any crypto, which we all know, especially in the United States, is a taxable event. Their credit lines are dynamic, which means that the value of your crypto goes up, so does your available credit. Really cool and innovative, and something I've never seen with any other platform before. You can check them out at thewolfofallstreets.link/Nexo, Nexo, and put your crypto to work for you. Guys, this is so cool. For the first time in history, rather than a company or a project sponsoring the podcast and newsletter, a grassroots community is doing it. The Cosmos community is extremely passionate and active, and because of that, cool things like this sponsorship can happen. Their Atom token has been absolutely on fire and solidified itself as a top 50 coin by market cap, and the Cosmos platform has so much in store. Now, if you don't know about them, Cosmos is effectively the port city connecting chains like Bitcoin and Ethereum to ensure your liquidity on any chain can be used anywhere. One of the things I'm most excited about is their new DEX, which is coming out, which will connect to any blockchain, so you can swap ETH, ERC20, BSC, or any other token with Atom. Plus, this DEX will have order books just like any centralized exchange, so it'll feel familiar trading just like you do anywhere that you've traded before. This is a first. It's never existed until now. You need to absolutely check them out at thewolfofallstreets.link/Cosmos, COSMOS, and see everything they have going on. I think there's a lot of people that are like, Coinbase is in there, they're front running, they're sweeping your stops, whatever. I just think that this is really complicated tech, and it's very hard to scale. And they're scaling so fast, these companies, and there's just so many customers coming in and so much trading that nobody's been there before. They're just really building these systems on the run.
Look, I'm in the process of my journey into the crypto world, and I'm fascinated by it.
Welcome.
I am baffled by it. Right, like I followed it since the beginning. Bitcoin started right around the time I started WallStreetBets. I'm like, oh, this is kind of a cool experiment, right? I'm an economist at heart, so I take this like an academic standpoint. Like, okay, well, so you need to have a currency with the properties of scarcity, and the indestructibility and blah blah blah. And this thing is kind of a cool concept. We'll see what happens with it. And then it starts growing throughout the years, and I'm like, all right, cool. Now somebody bought a pizza with it, whatever. And it starts kind of, and then people point out, okay, well, there's a huge problem because security issues or the efficiency issues or the time it takes to do it. And they start creating more and more solutions and the exchanges and decentralized exchange. And I am so impressed with how sophisticated on a financial level, because my expertise is in the world of traditional finance, with how dominated some of these financial concepts are and have become much more sophisticated in concept and in some cases in application than the actual finance world. And I am so excited by that.
Yeah, I agree 100%. But so touching on Coinbase, I'm sure that you've been following at least what's been going on with their stock and their launch. And it goes back to something you were talking about before, which was the very nature of listing a stock always was a way to raise capital, right? I mean, you would have an internet, you would have a IPO, you would issue new stock, you would, use that to build R&D, all those things. Well, Coinbase said, no, we're just going to direct list. And, there was all this insane confusion that I've been on the front lines of clarifying about the fact that obviously their executives had to sell or there would have been no stock for people like me to buy. But so what do you make about what do you make of the direct listing decision in general for a company, for Coinbase? Why even list if you're going to direct list is a question a lot of people ask. I'm just curious your general thoughts on it.
Well, I mean, why direct list? Why list at all? To access, right? If I want to buy Coinbase, I need to use my Robinhood account or whatever, right? So just that's a very important component to make it easy for people to do it. That's the concept of access is what's made the democratization of finance possible, both in crypto and non-crypto world. But I find it fascinating. I'm actually surprised or I'm happy that you brought that up, because I didn't hear very much conversation over the fact that it's direct listed. Most of the conversation revolves around the fact that it listed, right? And I'll send out a tweet about how, Coinbase decides to direct list on IPO. And I said something about how these investment banks are going to start feeling like Blockbuster soon. And 99.9% of the people didn't understand the tweet, and they thought I was talking about how cryptocurrencies are the future and hedge funds are in the past, and nobody read the direct listing part of it. I'm like, all right, cool. I guess it's so. I think it's great because it's putting more. I mean, it's a bumpy road, right? We're seeing what happened with their stock price. There's some benefits to going through a bank that has done this for a long time. Not always, because you see Facebook had a terrible situation, yeah. Right? But so they'll learn it. But the fact that they're cutting out some middlemen and they're able to just direct list with the stocks that are already out and about, like that's simplifying a system which should have been simplified all along. I believe in the long term it's going to lead to greater efficiency. I believe companies are going to try and in-house the IPO process to make it go smoother. Talking about setting that price point, the strategy so that they have less volatility going into it, but I love it whenever they're just cutting out a useless step that's just divvying up more money around, and that's also taking a step closer towards, and this kind of bridges the two things. If I believe listing on the stock exchange is good for access, and I believe direct listing is good, then the next viable question is, so why don't you direct list on crypto, right? Because now you can check both of those boxes the same way. And I don't see a reason why you wouldn't be able to or shouldn't be able to. So I see that as kind of the more important, more than the symbolic Coinbase is trading on my Robinhood account. They're getting a little bit closer to being able to go public directly on crypto.
Right. Yeah. Obviously, we preach decentralization from the very beginning. And it's kind of, when you look at any of this, it's sort of laughable because we've seen how easy it is for people to build and launch crypto companies within this ecosphere, in the DeFi space, and to never touch these legacy systems. So, I mean, I agree that I think that we're moving closer to that. But I also think that really the future will be opting out of all of that altogether and really just existing. And obviously I'm a bit of a crypto maximalist, but you'll have your Bitcoin as your digital gold, and you'll have all these banks and familiar sort of legacy systems that will look the same, will be built on Ethereum, and you go down that rabbit hole and you could just opt out of that entire system and live your entire life gaining yield and investing in companies you like.
I mean, it's possible, right? I've been hearing
it won't replace it.
I've been hearing, language like this since Bitcoin started in the Fed and the fiat currency, whatever. It's never going to replace it. Just like that. Yeah. I live in Mexico. They're trying to replace cash because of the illicit use and being able to dodge taxes. Whatever. They're never going to get rid of cash, right? Cash is just part of the thing. So you won't get rid of it. But here's what I'm starting to realize is you'll make it better. They'll coexist, and it's going to Robinhood forced brokers to give the free trades. It forced a lot of efficiencies and more competitive environment, and I believe crypto is going to force traditional finance to fix itself better. You're starting to see a lot of unions and a lot of overlap, and this is what I'm so excited about crypto at this point. Is what was previously just a really young concept is now super mature. You start seeing crypto spill over into Wall Street, the Bitcoin exchange, futures trading on the CBOE. You start seeing this Coinbase situation. You start seeing ETFs are trying to get out there, and there's a bunch of other things. You start seeing what do you call these tokenized stocks, these synthetic stock. You buy Tesla now, right? So now you got a little bridge there, right? And then you have it the other way around too, where the Wall Street people are able to go on crypto. And that's why I'm super excited and do believe those things are going to merge and coexist. In fact, that's, I'm so excited about this. Like there's a project that I'm working on now, which very directly attempts to do this, right? It's an idea where you can create a tokenized ETP, or it's like an ETF, but it's in crypto world. And you can put in this basket a little bit of Tesla, a little bit of gold, a little bit of Bitcoin, a little bit of crude oil, gold if you want, and a little bit of let's call it Samsung from Korea, a little bit of Japanese yen for the currency. And so you have this basket of goods in a single ETF that you should never be able to buy with a single ticker symbol. All of it's collateralized, so you actually affect the markets and you own the asset, right? And you've built this really cool bridge that removes a lot of barriers for people to participate in the market. And I'm so excited by that. It's not even funny.
I mean, so you guys have effectively are creating cryptocurrency.
Well, we're creating a DAO, right? That creates these ETPs. The DAO comes in the form of these tokens, and these tokens behave like a currency. But no, what we're going to create through this DAO is an ETP. It's an actual asset on the crypto world. It's not a coin because you're not using it to exchange it for goods and services. You're investing in it, and you can have a high risk, low risk, whatever. You can collect dividends on it, but you're straight up investing it in an asset. So it's not. Perhaps I don't know enough to say the differences between owning.
That makes perfect sense.
Okay.
No, that makes perfect sense. ETP, I'm assuming you guys are calling exchange traded portfolio, right?
That's correct.
Yeah. For people, obviously no exchange traded funds, but exchange traded portfolio. So the function of the DAO then is basically to select the assets that go into that product.
That's exactly correct. So you're then harnessing an aspects of the community. And it was a study that came out by, I need to find this university, where they took a lot of the stock, they took all the stock picks that were visible on WallStreetBets, and they did a really detailed graduate level analysis of how the stocks perform, the collective intelligence performs relative to the market, and they beat it by a very sizable amount. In other words, that this collective intelligence actually has merit to it, and people can actually do something better than any one individual with a great idea, or any one analyst that figured something out. So if you say, okay, cool, let's get this WallStreetBets community, or any community in general, put them all together, have people come up with different ideas, have people vote on how to create an ETP or several. You can have the YOLO, and you can have the Warren Buffett, and you can have the whatever. So that now you have 2 or 3, 4, whatever products that anybody, not just people that are involved with this, can go ahead and invest into, and relative to their portfolio. So there's that social element as well. And I'm so excited to see what can happen with that.
Yeah, it's really interesting. It's been proven time and time again by statisticians and stuff that the collective generally do much better than the individual when picking things like this. It's a classic, the parable of the ox, where they had, people guess the weight of an ox, and the person closest gets to keep the ox, and nobody was anywhere close. But when they took all 1,000 guesses together, they were within a half a pound.
Yep.
And so it's same idea. But I'm assuming also what's really interesting about that concept, and what I like about these sort of products in the crypto space, is that it really eliminates any of the fear of market manipulation, because it's so transparent.
Yes and no. I mean, there's going to be new things that come into place, and that's just part of life, right? It's going to change. You're going to remove certain types of manipulation and introduce other types of manipulation, right? Like, you're fixing a lot of the problems that happen with GameStop. That's 100% sure. You do no longer have to wait 2 days for settlement. You don't have to wait for this thing to go through 14 different places, but it still has to go through several places to get to yours, and everything's transparent on the blockchain. It's all, all the things that crypto people love about it. But I'd stop short of saying this thing is infallible and unmanipulatable, because there will be very smart people that, when there's money on the table, they'll find new arb opportunities, or they'll find new weaknesses and they'll jump on them, and then those things will get corrected. And that is the nature of life in general. So while it may plug certain holes, and we don't know what the new holes are going to be, there's probably going to be some new issues. But you know what? All in all, I see this as a much stronger system, and it's going to force Wall Street to follow suit.
Yeah. Hey, but you touched on earlier a few times, sort of cash will never go away because I want to be able to transact with you directly without a toll collector, with privacy, without the government knowing what I'm doing. Crypto obviously solves that. Even banks are now talking about using stable coins for settlements because they know how crappy Swift and ACH and all these other things. And so stocks are going to go that way too, right? We're not going to have 48-hour clearing anymore for stocks. They're going to eliminate some of those middlemen. But then, you talk about cash will always be here. It will, but it's going to be digital. I mean, the dollar's going to go digital. China's already going digital. I mean, the future is technology. There will still be a market for cash, but money is going to be digital, and it's not going to be private anymore.
There's lots of world. I'll agree with you. China has the ability to pull that off. The U.S. has the environment ready to pull that off, and most first world countries. But if you go outside of that, we're quite a few steps away from that. You'd be surprised how many people don't have internet in the world, right? So,
no, of course. I mean,
so you still got a long ways to go. If you're really fast forwarding a lot into the future, I definitely see it as a possibility, because you can replicate the benefits of physical cash using cryptocurrency. Like, I can see how that there's all the same stuff, all the same attributes. You can use them there, with the exception of electricity. But are we going in that direction? Well, it's an easy one, because we absolutely are going in that direction.
Well, you said you live in Mexico, right? I mean, I believe the stats on Mexico I've read before from another guest actually was that 6 or 7 out of 10 people are unbanked in Mexico.
Yeah, the in Mexico, the number of people that aren't on the formal financial system is astounding, and that creates tons of opportunities and et cetera. But I don't believe that's going to stick around like this for long. Everything that we have in Mexico, it's a few years behind what happened in the US. When I first moved here 7 years ago, people didn't really know what Uber, and they didn't trust it very well. And I'm, of course, using it to go everywhere. People didn't really trust Amazon deliveries because logistical things. Now they have same day deliveries all the time. So we'll get there for sure. But it's just there's a cultural component to it, a technological one, and same with the bunch of countries. Mexico's not unique.
Mexico's actually far ahead from a lot of the other ones where it's 8 or 9 people, and at least a lot of the people in Mexico are partially banked. I'm curious what is next for WallStreetBets. So now we've seen what happened with GameStop. We know it can be done, but we also know that the eyes of the world are on it. So is this something that will continue to see the collective retail be able to move markets? Is that even something that the community is talking about anymore? Are they still focused on GameStop?
I'd be lying if I knew where it was going to go. Right, a long time ago, I realized that I don't really know anything about anything. I started off by saying I predict all these different things, and this is the best way to do things, and then quickly learned my lesson that there's no point. And even if I wanted to exert my ideals, like, there's just smarter people than me. There's more talented people than me, and they're going to take this anywhere that they want to go. Are they going to try and replicate what happened with GameStop? Probably. A lot of people made a lot of money from it, and so it's attractive. Can they do it as effectively? It's not as black and white as just buying the stock, right? And even if you say, well, it has to have a really high short float. Well, it's not as easy as just buying the stock that has short float. It needs a lot of stuff, and they've done it a bunch of times too. Before GameStop, we made it on the cover of Business Week magazine. I think it was February or March of 2020. And that article was talking about how WallStreetBets kind of cracked the cheat code for being able to find these opportunities and capitalize on them with different stocks that were taking place at the time. Much lower profile, but it was mechanically the exact same thing. They try to do it, sure, maybe we'll see what happens. But my money is on on people finding these inefficiencies. In this case with GameStop, it was, let's call it a short squeeze, even though that's still very simplified.
Right.
But before that, there was the infinite money cheat code, right? Arguably you can question the productivity of that particular type of maneuver. This is where people sold a covered call and they got their money from the call itself, and that money wasn't collateralized properly, so they could recycle it and use it over and over and over and over, to the point where they'd have $1 million worth of buying power on a $5,000 deposit. So they're doing what Archegos did pretty much. Right. And so that was kind of a high profile situation. That particular event caused the problem to be fixed. Before that, it was the box spreads issue with these things. And so my bet is that these guys are going to find, sometimes in the way of this picking stocks or whatnot, and sometimes in the ways of the mechanics, but they'll continue to find opportunities and they'll exploit them, and then they'll get fixed up. And so we'll end up with a stronger system, and then with the WSB DApp, right? This is the decentralized organization that I'm talking about. They're going to be doing much of the same, just in a less chaotic manner, right? Because there's at least rules to the game of saying, all right, so the way that you interact with this thing is you pick the CTS, whatever it is. But if you have enough minds to this thing and you have enough creativity, you can pull off pretty much anything, because you're daisy chaining a lot of components to the financial system. So you can do stuff that I can't even imagine. You can buy mortgage-backed securities with these things. You can buy real estate through these things relatively easily, thanks to things that already exist with this. And so what's going to be the next thing? I can't really predict it, but it's going to be baffling again. It's going to be shocking, and it's going to be really spectacular, and it's going to be the way that everyone does it.
You nailed it. I mean, it's all about identifying those inefficiencies, and you can look through history of Wall Street. When options were introduced, the inefficiencies were insane. People made crazy money doing things that are obviously not remotely possible anymore. Even in the crypto space, we saw this, I don't know if you're familiar with it, probably are, the Grayscale GBTC premium trade. That's how all of these platforms were offering huge yield, because GBTC was only available to institutional customers and was trading at like a 30 or 40% premium. So it was free money, but that went negative. Right. So that trade disappeared for these huge platforms. Now it's the cash and carry trade. Everybody's buying spot Bitcoin and shorting the futures because everything's in contango. But that's dependent on everybody always assuming that the price of Bitcoin will be higher in the future. But that will obviously be eliminated eventually.
How beautiful is that, though? I mean, that process you just described, the strongest positive bullish sign for any market ever. The fact that people see this, jump on it, and make that inefficient, reduce the profitability of that inefficiency, is what makes everything so much more productive. That can be traced to people having more jobs, right? Like it's quite a few steps for me to do that. But this ARB opportunity you just described makes the entire system, the integrity of the entire system, so much better that it gets me excited. Yesterday, I learned about front running in the crypto world. Blew my mind, right? I was like, Jesus, this is brilliant, right? Because I was like, so what's the big deal if they front run? You've heard my perspective on front running on Robinhood. I don't really care very much. I'm like, so what if they do it on crypto? Crypto has such a margin of, if we're talking about pennies in equities, Bitcoin is plus or minus $5,000 to enter your limit order, right? So I'm like, so who cares if they front run it? But then they're like, no, you don't understand, right? These guys see this transaction ahead of time and they just bid a higher, verification fee, and they get it done faster. And I'm like, geez, this is brilliant.
It's high frequency trading like 10 years ago, right?
It's
I mean, that's
awesome.
Crypto, trailing a lot of the things that were that people did in the earlier years.
Yeah, because what happens after that is then you have to combat that, right? And so you come up with other ideas to try and mitigate that, and then back and forth forever. But every time that they try to do this, everything improves. So I love it. I just smile whenever I hear about these things.
It improves the market. I mean, a lot of people think that options are built for trading, but options are really created to eliminate those inefficiencies with time. You just find them. Obviously, it gives you price discovery. It gives you an idea of what price of value, but It gives a lot of opportunity when somebody understands how to do it. But and the flip side of what you said is, yes, it kind of eliminates these arb opportunities. It also is going to make it a lot less fun for people down the road, for traders,
Well,
right? It's going to
yes.
eliminate, eventually the market becomes efficient, it becomes less volatile, and we'll have to find something else to gamble on.
Oh boy, now you just pulled off a market becomes efficient word on me. No, that's as soon as something becomes less interesting, then something new is going to
Right.
come around that is interesting. So
Find something else.
so sure, that particular maneuver is going to go away, but there's going to be 10 new ones that pop up, and that's what's so fun about this game. You can either stick with your old-fashioned maneuver and still make money that way, or you can just constantly be on the lookout for these crazy things, and that takes a lot of time and effort. But certain people really enjoy that process, and it just further makes everything stronger.
So I heard a rumor you might be making a movie about all of this.
Yeah, I signed a what do you call it? My life rights. It's such a weird word for it. It sounds like I'm a prisoner. To a movie production company, and they're in the process of making it a movie. I know there was a lot of interest from Hollywood when this thing broke out, because it's just I think they're bored because they had nothing to do this past year. And also this was just such a great story that it removed coronavirus off the headlines, that there was a lot of fun. It was a lot of fun. It was that talking about learning experiences. My phone ringing off the hook from people that I never thought I'd be talking to. So I got kind of a quick rundown, but yeah, they're going to make the deal I made with the studio. They can make a TV series, a documentary, a movie, a podcast, or even a live play. I don't think that'll ever happen, but yeah,
I would go see that on Broadway though. I would, right next to Rent.
So we'll have to wait for that to come out.
We'd be in it if they make a movie. You get like do you get the Stanley role, where you're like in there for 1 second selling someone a comic book?
I'll be in the cameo. Yeah, no, but I don't think so. I enjoy watching movies. It's not really my scene. This was kind of fun because it's, how often does that happen? But yeah, as of now, the fun that I've had is talking to people, right? Like I'll talk to script writers and I'll talk to producers and directors or whatever to kind of do this weird bilateral interview thing, right? Or we want to find out whether we want to work with each other. So it's new to me, but it's fun because just the types of conversations you end up having with people and the types of perspectives you get, and so we'll see.
There's obviously been a lot of benefit to being thrown in the spotlight, right? I mean, having Hollywood movies made and people buying your likeness, but there has to also be a downside to that, right? What have been the negatives of having so much attention on you, especially when it pertains to financial markets in the United States of America?
That's an awesome question. I appreciate it because I don't think I've been asked that before. So I'm gonna have to improvise this answer. The benefits of it are absolutely the doors and the opportunities that are open, and the ability to venture into new places. The downside is it also kind of limits my ability to maneuver. Let's say that I say, all right, whatever, I'm kind of bored with this universe and I don't want to do movies, and I want to be famous, and I don't want to do these things, and I want to go be a teller at a bank. And if I go to apply at a bank to become a teller, I'm going to have a hard time getting that job. Even I got a request by a guy that works at Cameo, and he writes me, he goes, dude, you're getting tons of requests for
how to do the drops.
Yeah, where you make a few $100 for a 2-minute video. And so I'm like, oh, cool. I'm kind of honored, but I really can't do that, partially because of contractual restrictions, and partially because I'd be exposing myself to other types of liability.
Yeah.
And I'll have to think about these things and that kind of stuff. Like I no longer have that freedom to really, if I want to say something ridiculously stupid on social media, I have to be careful. Yeah.
But has there been like threats, or was there at any point a fear of litigation, or did you worry that, I mean, people talked about you guys going to jail for this, right? I don't know if anyone serious did, but that was certainly part of the narrative in the very early days.
Yeah, I'm not worried about liability on that standpoint. Like last year, I was in the process of creating a live day trading, a competitive day trading event, right? A competition, which whatever, that's got stopped by coronavirus, but thankfully I'm restarting that. But I had a chance to work with some insane lawyers that assuaged, that were able to counsel me on a lot of stuff and a lot of really complicated stuff. So now I feel like I dominate the legal aspect of it, and I have the backing for it to know when I can and can't do things and what I should or shouldn't do in certain situations. So that's in case things get hairy. What happened with GameStop obviously had nothing, there was nothing wrong with that. With regards to threats and things like that, look, it's the internet. I rub people the wrong way. I have people that don't like what I'm doing for whatever reason, and they throw hate my way. But I have thick skin, and it just bounces right off of me, because when accusations get thrown at me, or when people try to lob things at me, and they're so outlandishly false that dignifying with an answer,
you can't respond. You can't respond.
I don't respond. I will eventually, eventually it goes away. And so it really doesn't even register. Like, people oftentimes have to bring this criticism or tweet or video or whatever to my attention, be like, they just posted this, and I won't even bother reading it because it's irrelevant. The people that are positive in the world are so outnumber the people that are negative that don't even think twice.
Sure. Psychologically, they say, like, you could get 100 positive comments and one negative comment, and you'll only ever remember the negative one. Just part of human psychology. But
and I don't even read the negative.
If you don't see it, then it's irrelevant, right? So, yeah. And what's kind of crazy, I think, that people don't realize, like, you wrote a book about all of this before GameStop even happened.
I did. I wrote a book specifically kind of outlining where the world is heading. And I wrote the book in 2019, published it in early 2020, right as coronavirus was kicking in. And a lot of what I talked about in the book is the tendencies of where the retail traders are going, where where Wall Street is going, how it was that we got to be where we got to be, and what I anticipate is going to happen next. And as of now, I've been pretty darn close and pretty accurate with a lot of stuff. I never predicted in a million years that it would take 12 months for it to kick in. I don't think anyone, and a large part of that is because of coronavirus. But pandemic. This issue with the brokers, there's a paragraph where I spot on said that just like banks have to go through stress tests, right, to avoid another liquidity crunch, whatever. I said, to my knowledge, brokers have not had the proper stress tests to withstand stampedes of thumb traders that are not afraid of margin calls, right? Like, and that was kind of a foreshadowing thing of saying these kids are going to break it. And sure enough, they did, but hopefully to a net positive effect.
Hopefully to a net positive effect. I know we're up against it here with time. So, where can everybody follow you and see what you got coming next? Find out if you're going to get that cameo in the movie or not.
Yeah, you can follow me on Twitter at WallStreetBets, all spelled out, all one word. The website that I'm currently working with for all these things is WSB.DAPP.com. And on Instagram, just Jaime Rogozinski, and that's where you'll be able to see all the different things that I'm working on, and hopefully there's going to be some announcements pretty soon.
Awesome, man. Well, thank you so much for taking the time. It's great to actually hear the story from you. I'm sure you've seen how much misinformation and insanity there is around it, but I think you offer great perspective, and I think it's going to be really, really interesting to see how this all plays out over the next few years.
Yeah, I can't wait. Thanks a lot for having me. This was a lot of fun.
Thank you, man.